Now, for every single trader, the real test is whether you can use it in real time. So let's look at some good stocks versus bad stocks. All right, let's say you have two stocks on your screen, right? Stock A is up more than 3% before the open. It had a really positive catalyst, right? There was some really good news about this stock. Somebody called it a really big opportunity. Sometimes a stock exactly like this has just reported earnings or raised guidance, right? When we look at it, the stock's already traded 25% of its average daily volume before the open, right? And it's breaking above this important consolidation area, this important resistance area. It's in a strong sector, right? The stock obviously has average volume over 2 million shares and an ATR way over $1. So now let's run our filter. Reason? Check. Yep, it had a really positive catalyst. Something was changing the story today. Change the story today, that story hadn't changed yesterday. Participation? Yes. Pre-market volume is really strong in this stock. Structure? Yes, it's breaking above a major higher time frame consolidation. A stock like this deserves your attention. Not because it guarantees a winning trade. Nothing guarantees that. But because if a clean setup forms, if a clean trade forms in this stock has all the ingredients that create that follow through. Now let's compare that to stock B. All right. Stock B is actually down a little bit on the day. There wasn't any fresh news in this stock. There wasn't any real volume in the pre-market. The only major daily levels kind of far away, right? And it has a relatively low ATR. That choppy pre-market action without the sector strength doesn't really hold water. The chart may still wiggle, right? It may still look active for a few minutes. You might get faked out because it looks good and then it looks bad. It might even form a breakout pattern intraday. But when we run the filter, reason, no. Participation, relatively weak. Structure, not really clean. This is not a stock in play. That's just a stock that kind of maybe might look interesting. And one of the biggest upgrades a developing trader can make is learning the difference between interesting and in play. Interesting is not enough. Just because you like the stock doesn't mean other participants are going to join it today. Now, here's where it gets more advanced. Sometimes the bad stock will actually have the better looking pattern. And over the course of your career, you will see tons of bad stocks with really good looking patterns. Guess what? That's just a trap, right? The trap is it's a good pattern in a bad stock. You're going to look at it and go, well, I could have gotten that. I should have gotten that. How did I miss that? You didn't have a reason to look at it to begin with. Honestly, if we use our checklist, you didn't. The stock can even build a small range, break above the highs. Candles can look really good. The entry, when you're looking back, looks so obvious. But again, there's no fresh catalyst, the relative volume is weak, and there's no important daily level. The market is really going to dictate a lot of what happens in here. If the market's choppy, that stock's going to be choppy. If the sector is choppy, that's not going to be helping. What's funny is when the stock does break out, the volume dries up, and then the stock fails. Now, the beginning trader looks at that and goes, yep, I could see it. The breakouts don't work. I can't trust my system. I need a better entry maybe. Or I should have used a tighter stop. I shouldn't let that turn back against me. But a professional trader and somebody aspiring to be a professional sees something completely different. The professional just says the setup was not the real problem. The stock was. There was not enough reason for this to work.